All right, hey everyone. It is 2:20 on the 12th. We've closed the trading for the day after the report came out at 11. Watched it trade for a little while. I'll get to the charts here in a second, but let's go over what the USDA did today. So basically, what they ended up doing is saying, hey, the crop was smaller than we originally thought. They said the yield is more, but that's because we lost a lot of harvested acres. So they took our total production number down. You can see that they took the production number down, and they did that after raising the yield and decreasing the harvested acres. So total production lower, and then they decreased demand just a little bit as well. And that ended up being a net decrease in our carryout by 15 million bushels, which is significantly lower than what the trade was expecting. So you saw corn rocket up out of here. And then on soybeans, they lowered acreage a little bit. They lowered the yield, which is what caught the soybean market by surprise. I think people were more thinking that they would raise the yield there. And then they also trimmed demand just a little bit. And the net effect of that was a decrease of our carryout by 210 million bushels. So the nearby soybean contracts got bought because of tight supply, and the traders were caught off guard there, okay? So you say, well, hey, you sent a video out earlier this week saying, man, we're bearish as hell because our carryouts are going crazy, and you're wrong because the USDA didn't print it that way. Well, that's not what we said. What we actually said was we don't think that the USDA will do a lot on this report, but if we look at where we think we're going to end the year, which is where our video focused, because that's what we're trying to do, is manage new crop bushels, and we're trying to forecast what our risk is moving forward. And in our opinion, nothing has changed in that case, okay? So the way these USDA balance sheets work is this number right here, this beginning stocks, that is the prior year's ending stocks, right? So it's just like your bank statement. You have an ending balance on the end of the month. That becomes your beginning balance for the next month, okay? It's not rocket science. So you take that number and you plug that in here, and then you start guesswork. You have to guess what your acreage is going to be. You have to guess how many acres you're going to harvest, and you have to guess what your yield is going to be, and then you have to guess what your demand is going to be. So at this point in time, we now know what they think happened last year. Now we have to look forward and say, what's going to happen this year? Does that make sense? So when we look at that from a future standpoint, and you have to assume that we're going to plant a normal sized crop, and you have to assume we're going to have normal weather, and you have to assume that we're going to grow the bushels. So in this, here are three different cases using 92 million acres versus 89 versus 93.5. I'm guessing, I'm making this up. I'm just saying what if, right? Same thing here. I'm using 92% of harvested acres, which is about the average over a 10-year period, actually get harvested. You can see that that's where we had the surprise this year because the trade was off 1.6 million versus what they expected. And that really caught traders off balance, but you have to assume a reversion to normal looking forward. And so you're going to assume 92% gets done, and then you're going to assume an at or near trend line yield. So let's call that 175. I think it's actually like 178 or something like that. So for our bearish case, let's pretend 180. Our neutral case, let's pretend trend line. And for our bullish case, let's pretend that we have a little bit worse crop than we had last year, which is, burning up all of Kansas, Nebraska, northwest Iowa, and destroying a lot of South Dakota and North Dakota, or about a third of the acreage in our corn belt, and we barely knocked the yield off, right? So you take those numbers, and these are your ranges for carryouts looking forward. So this is why we don't think anything has changed based on today's report. All it did was decrease the beginning balance that we had in our bank account versus what the trade expected. And this helps to reconcile and explain why our basis levels in the nearby have been so strong relative to the futures market, right? There has to be an explanation for that. That's what the market has seen. That's what the market knows. And so at some point in time, we are going to start pricing in heftier balance sheets. Now on the right, you can see a scenario where we do have a tighter balance sheet than this year, and an ending stocks number below 7.5%. Look at what happens though to get there. Number one, you have to plant fewer acres than what's expected. You have to plant about what we had last year. Number two, you have to have a yield problem down at 171.9. And number three, you have to add close to 400 million bushels of demand that the USDA currently is telling us is not there. So if we have a demand shock, a weather shock, and an acreage problem, like, hey, maybe the corn, maybe we can't get in the field early enough, maybe it's too wet, we have a repeat of 18 or something like that, and acreage comes down, that's what that would take. And then you end up with a lower carryout. This would take us much higher. This would take us to all-time highs, I think, and would continue to see stronger basis. Either of these other two scenarios takes us much, much lower, which is why we still believe the prudent move is to stay hedged, to stay with your risk managed, and we will defend it, and we will be able to re-own it if this becomes a problem. But we want to defend these higher prices now and worry about it moving up against us later. That's how we see corn. So now, what, Jeff? Yeah, and what we're talking about here is all new crop, right? And we'll go through the new crop charts here in just a second. But let's look at soybeans. All right, so you can see what they did with soybeans here. They didn't touch acreage. They touched harvested area by 300,000 bushels or acres. They dropped the yield. That surprised everything. Ended up lowering the carryout even after seeing a little bit of demand weakness. Not nearly as weak as what the market was anticipating, so we sent it higher. Okay, same thing. Take our ending balance, put it in next year's numbers, and just start looking at what happens. Well, a lot of forecasters are looking at 89 million acres of soybeans, assuming we harvest 98% of them, which is about the 10-year average. And let's say we have a big yield at 52. We end up with a carryout at 400 million bushels, which is probably not $6 or $7 beans, but it's certainly not $15 beans either. And if you add, swap acreage around to secure more oil or something like that, you end up with a much, much heftier carryout unless we have exports pop back in. So over here on the right, like corn, we have a bullish scenario, which is we plant fewer acres. We have a similar yield next year to this year, and we end up having demand exceed what the USDA says, and then we have 100 million bushel carryout, which is all-time high soybean prices as well. So now I know you guys, and I know how you think. I know that you're all going to cling to the right side of this chart and say, "Oh, hey, we're going to all-time highs because there's a chance." Yes, I'm telling you there's a chance. No, I'm not telling you that that's what we think is going to happen, because I think it's much more likely this way. Okay, so stay with us. I promise you that if this becomes part of the equation, then we'll be more than happy to get bulled up and start buying it. But in the meantime, I don't think anything in these numbers changes our mind on what we thought, on how we've been looking at it. So I hate to be the bearer of bad news there, but nothing's changed. So now let's take a look at our at what our charts did. Okay, this is new crop soybeans, and here's what I want to point out. I want to point out that nothing has changed on this chart from yesterday. Yes, we were up a little bit. Yes, we tried to break out the bottom side of this trend line and failed. And yes, that could turn significant. But we were unable to close above any of these prior highs right here. And we didn't take out any major support levels. So as far as new crop soybeans go, I see no reason to change our analysis technically whatsoever. And in order to get us to change our mind, we have to get up out of here and invalidate this bearish case, okay? So what about March? Well, surely they did it. I mean, hey, man, they were up 27 points today. Surely they blew that thing out of the water. Well, they were definitely stronger, and we have broken up out of this wedge, right? But what we failed to do is take out any of these highs. So we haven't taken out this high. We haven't moved on up higher. Now, I think that in order for the bearish case here to be legitimate and to stay intact, I think we've got to see pretty much immediate weakness coming out of the gates tonight, Monday, probably at the latest. And so what we want to do is we want to be buyers of strength up above this. Now, new crop guys that are managed in new crop, nothing yet. I'm talking much more short term. And even if we do get a rally in the old crop, I don't think it's going to drag new crop up high enough based on those balance sheet risks that we see. So what we want to do is we want to be buyers of old crop, probably above today's high. I don't know. We'll watch that action closely tonight. For sure, above this high, we want to make sure that we're having net long position. So if you were listening to our adjustments yesterday, we've been playing the short side of beans. One rule of speculating is that, hey, if the market doesn't pretty much immediately move in your favor, then you need to either exit or you need to hedge it. So we've actually hedged that position twice by buying calls. We sold them again down here, and now we put them back on yesterday just out of respect for the report that this might happen. So if we do break higher, we're just going to exit the short futures and hold the calls. And if we start breaking lower, we'll put those things right on back on. So it's going to give us lots of wiggle room to manage that position and start moving forward. So remember, you want to be perfect on your entries and your exits, but how you manage the position is way more important than where you entered or where you exited. It's all about management of that position. So, anytime you're talking to a analyst or a broker or somebody that's signal selling, that's where they stop. They just tell you, hey, sell it or buy it. Well, how do you sell it? How do you buy it? That's way more important than anything else, and that's the art of the business and what's in the hardest part. All right, now let's look at corn, and we start with the new crop. New crop corn still contained within this downward price channel. We were unable to reclaim our hedge line. We were unable to also break new lows and come on down. So it is a big bullish engulfing day. We are engulfed 1, 2, 3, 4, 5 full bodies today. So that is significant and could lead to a little bit higher prices. But as of now, there's no chart damage, right? We've failed to reclaim this level right here that we traded against for a long time. We failed to take out any prior significant highs. We haven't gotten above the 200-day moving average, and we haven't gotten out of this corrective price channel. So there's not enough here really to want to get crazy long this market or buy it. And if you did buy it, you definitely want to have a stop down here at today's low as an easy exit point. Okay, so for us, we're going to stay where we are, and we're going to watch it and watch the market digest its activity. So what about old crop? Surely it's more bullish because it was up 16 points, right? Well, yes and no. Here is where corn was trading at 10:59 when the report came out. It was trading right on its low of the day, right about 6:49. It really looked like it was going to accelerate lower. USDA surprised the market, and it rocketed it on up higher. It put it right back to mid-range. It did reclaim the 660 level, which should make the bears nervous. It failed to get above the upper trend line, and it failed to break any significant highs moving forward. It broke lows, which is not nothing, but it failed to break highs. So corn has some work to do here. Our position is, if you listened yesterday with our spec book and our spec clients, we have been trading since this area in here. We've been trading short options or long puts, short calls. And we have made a couple of adjustments, and so we were into that trade yesterday. And here's the impact of position management for you. Okay, this is how you can still be. You can be on the wrong side of a big report day and still not get crushed. So yesterday we were short 690 calls and long 670 puts. Okay, and we were in that position for about free. Now, when we made the decision to adjust it yesterday, we were trading down here, right? And that position was worth about 19 or 20 cents. So the The 670 put was trading for about 20, 21. I'm sorry, it was trading for about 26, and the 690 call was trading for about 8 cents. So it's trading for roughly 20 cents. What we ended up doing is buying in the 690 and buying 2 for 1. So we went from being short a call to long a call. Why did we do that? Well, out of respect for the market. I didn't want to buy futures. I didn't want to roll the puts down. We thought volatility was cheap relative to where it should be. So the net result here is that new position is worth about 28 cents. So it was a net savings of almost 15 cents on the day today just by covering the short call and replacing it with a long one in order to hedge it. I think as we move forward, we'll probably, if we break the top of this channel, and certainly as we break above the 685, we'll probably take a stab on the long side with long futures if the market can muster the strength. But as of now, we're actually thinking opposite. We're going to sell futures weakness as we break back down to the lower third or into the 660 level if this fails to hold tomorrow or Monday. So we're going to give it a little time. We're not going to overreact to it. We're not going to adjust trades. We're just going to let it work itself out and tell us what it wants to do. If it breaks higher, great, we're going to own it. We're already long a call, so we're an unlimited profit potential this way. We have unlimited profit potential to the downside. It's got to move a long way to pay out. So we'll make adjustments and won't let us get killed by time decay. But higher prices may beget higher prices, and we'll go along for the ride. And lower prices, if we start to price in a bigger balance sheet, then off we go. Now, for those of you that are new to this is not wishy-washy at all. This is where trading meets forecasting, okay? On a forecasting basis, we think we're headed lower longer term because of the balance sheet risk. On a trading basis, where we just want to profit from price movement, we don't care if it goes up or if it goes down. We just don't want to be chopped up too terribly bad in the middle of this triangle wedge. So that's why you make adjustments, and that's why you say, hey, it might go up, it might go down, and we don't care. We just want to be along for the ride when it happens, okay? So that's the difference between trading and risk management. Is in risk management, you want to trade the back month and make sure that your farm is protected. And then if you're going to do something in the front month, do it smaller and manage that risk very, very tightly. And you just have to know, you just have to commit to the mental difference so that you're not trading new crop and trying to manage risk in old. You've got to manage risk in new crop, and then if you trade it, you've got to call it what it is and act like it on the front month, okay? Now, wheat. What did wheat do today? Wheat got some strength based off of corn. Nothing fundamentally was bullish in wheat, really. That if anything, it was a bearish surprise. So we did get a little bit of a bullish reaction to bearish news in wheat. We'll see if that gets some follow through. We talked about the risk there yesterday with this divergence that's intact. This divergence is now confirmed, and it could lead to higher prices. But we think anything under 9 to 950 is going to get into a sell zone. But we're going to let it unfold before we get into that point. So if you were with us yesterday, we put futures exits at 850. Or buy the 850 put. That's still a good, or 850 call. That is still a good strategy to have in, because if we do break above this line, we could challenge and we could run 30, 40, 50 cents. So it just kind of depends on what you want to do. If you're managing risk here, I would just buy the call and not take off my hedges, because it can reverse and head lower just as quickly as it went back up, and you won't get your hedges put back on in time. That would be my bias there. But if you want to talk through something, we're happy to talk through it with you. All right, that is 20 minutes. That's a lot longer than I hoped it would be, but there's a lot of information here and a lot to cover. One day is not the tell-all on a report. Don't get sucked into thinking that. It's where you are 3 and 5 days later that really matter. So we will see how the market digests this information, And remember, 95% of all current known information is already priced into this market. So it's looking for new information that will push it one way or the other. And we think that that is bigger balance sheets coming forward. But it'll be, April, May, June, July before the USDA starts to really talk like that, because it's going to give itself time to make adjustments and slow play it and slow walk it before it scares the market. So with that, remember, there is risk trading futures and options, and you should only do so in light of your own financial condition. Thank you for listening. It is a pleasure to have a few minutes of your time. If you have questions, please let us know, and we will do our best to get them answered. Have a great night.